We're also watching shares of Meta today after the tech giant has faced a tumultuous year. It's down over 60% year to date, joining several members of the battered tech sector. You know, when Jared was running through some of the names off of the top that have seen dismal years, I don't know if we have a year-to-date chart of Meta platforms that we could toss up to really take a look at some of the movement. And a few things that this has come back to. Number one, and most recently perhaps, is the deceleration in advertising dollars that are going digital. Now, there's still, of course, a large market for digital advertising, obviously, but it really comes back to how much of those spends in cost restructurings for some of the biggest advertisers and agencies that are managing ad spends are pulling back from their spends on Facebook Blue or even on Instagram, one of the more popular platforms with a younger demographic. As at the same time, Meta Platforms itself earlier this year had announced that they're going to be spending $10 billion in essence, round number, for making the metaverse real.
Far be it for me to justify anything Meta does, but I do think what Mark Mahaney over at Evercore ISI told us yesterday pointed out something very interesting that all investors need to consider. Meta has been arguably out in front of Google and Amazon in cutting billions in dollars of costs. And you have to wonder what quarter do those cost cuts start to appear for Meta? Is it the first quarter or second quarter? Because you could be looking at, even if sales are still under pressure because of what's happening in the economy, you could be looking at a major reacceleration profits for this company, while a competitor like a Google, while a competitor like an Amazon, at least in terms of investment dollars, they're still probably only announcing cost cuts in the middle of next year.
Interesting. You know, as we take a look at some of the big tech or mega cap tech names there on the screen, and we were talking about Meta's decline here over the course of the year, some of the other worst decliners that I saw when Jared had them up on the heat map earlier, Lucid, Rivian, Okta, Peloton, all of these were some of the Peloton plays, or excuse me, the pandemic plays. Peloton was a pandemic play, and Meta certainly was a beneficiary of the amount of screen time growth that we had seen over the course of the pandemic.
Bottom line is, Lucid needs to make some cars. Rivian needs to make some cars and get out on a more consistent production schedule. That's one reason why those stocks have tanked.